Run us through some of the highlights in these earnings then, as well as, crucially, how they did on gas trading, because that was such an area of weakness for BP.
Yeah, exactly. So quite a boring set of results in that it met expectations, but that's not a bad thing. And, for investors, they're happy because they've got 3.5 billion buybacks, which is more than they had guided on. They'd initially said 3 for the quarter. So that's a good thing for investors, and they're happy their returns are continuing at a solid pace.
Now, hang on, the buyback wasn't boring, was it? 3.5 billion? I mean, it's well above the BP number, 1.5 billion, so 2 billion above BP. There's also the idiosyncratic story, of course, around Shell. But what does that tell us about their ability to return cash to shareholders in the quarters ahead?
Yeah, this is something that really has turned around for the company. If we look back a couple of years ago, their return on average capital employed was like 3%, really paltry. And now it's well over double digits. They're piling money back to investors through dividends and buybacks, and it's at a higher rate than their peers, European peers at least. So that's exactly what sort of activist shareholders like Third Point were after.